What's good, YouTube? This is CryptoFans with the main things causing a crypto crash video. This is targeting beginners, because if you were like me when I was learning crypto and you were watching videos, it was just a bunch of people online talking gibberish. I'm here to hopefully educate you and make it more fun and exciting and something you could really understand. But without further ado, let's get into it. And I'm glad you're here. Thanks for watching. Okay, the first point is market cycle. If you were one of the 2.5 people to watch my first video, thank you by the way, you might have heard me say something about bear markets being bad. Pretty much that's all I said, and I should get more in depth into that for this video. A bear market is basically the sustained decrease in value of a crypto over a long period of time, and a bull market is the absolute opposite. Sustained increase in the value of cryptos in the market over a long period of time. Crypto markets tend to have shorter bull market runs and longer bear runs than the stock market. But crypto typically lasts 4 years in length, with 1.5-year bull runs followed by 2.5-year bear markets. In contrast, stock bear markets are usually under a year in length, and bull markets last well over 2 years. This recent crypto bull run was a bit different because it lasted a few months longer than the 2017 run. But as the crypto space grows, it's expected that market cycle dynamics and length will change. But for now, this is all we know. There's a strong possibility though that this bear market won't last as long as it lasts. Outside of market cycle though, there are other factors which I will go over that kind of tell you why we're all suffering right now. The market cycle is just something for you to keep your mind on as you examine other factors influencing the price of cryptos. Keeping market cycle in mind will help you choose better points in time to sell or hold your investments. Alright, the next part is inflation, a word that I hope you've heard before. If not, I'm going to teach you what it is. Inflation is basically when the buying power of a currency goes down over a period of time. When you hear sayings like the cost of living has gone up, inflation is usually what they're talking about indirectly. Now, what's causing inflation? The main things causing inflation are shortages in labor and goods caused by the pandemic as well as the war. When it comes to the war, the major way the economy was affected is through oil and gas shortages. The decision by the West to cut off oil from Russia in the absence of a good replacement oil supply has led production costs everywhere to increase. This is because oil and gas are major energy sources. Almost all raw materials and finished goods are transported using gas-powered transportation. If the cost of transporting goods increases, then the price of the goods will increase as well. The pandemic, as y'all know, also caused a lot of supply chain disruptions. It was crazy. People couldn't work. We were learning about COVID protocols, and then, we were just destroying crap over contamination concerns. These disruptions caused a slowdown in production. Slowdowns in productions can lead to a smaller supply of goods. And if the supply of goods goes down while demand stays the same, or even increases, as was the case in many parts of the economy, the value of goods increases against your dollar. This increase is what we call inflation. Let me try to relate it to real life. If $5 used to get you a large coffee and bagel in 2019, then the supply disruptions causing the shortage of coffee beans for coffee and wheat for bagels, the price of these goods will go up in 2022. Because of this inflation, with $5 you can probably only get a large coffee. And that's pretty much inflation. Hope I explained it good enough. If I didn't, let me know in the comments and I'll try to explain it better there. But next and finally, the final point, we have market uncertainty. For seasoned crypto investors who have been through at least the 2017 bull run, this isn't an issue. Experience taught senior investors how to negotiate through this type of market. But in the last 5 years, there's been a lot of new blood. A lot of y'all trying to learn about the market at all income levels, just flooding in. And this is great during a bull market when investors are optimistic about the future price of products, but it's kind of bad during the bear market because a lot of people feel less confident about making investments when the whole economy looks like throw up. And as we know, when the market looks like throw up, this leads to a sharp decrease in price of a project as lots of people are trying to sell and grab cash in a small period of time. And that usually causes a crash. Because crypto is the newest of the investment assets and therefore the most unknown, the crypto space feels the effects of the economic downturn first and the worst. But with all that said, if you're a smart investor and you know how to scope out good projects in crypto, this can be a great, I promise you, great buying opportunity for projects that have potential to blow up in the coming bull run. And that is it for the points in this video. I tried to keep it, semi-short because, like I said in the previous video, I have the attention span of a hamster. So I like to look at quick videos whenever I'm on YouTube. So, yeah, hopefully I helped. If not, let me know in the comments and I'll try to get better at this. Appreciate you guys for watching. In the future, I might do another video on what projects to look for in markets like this. But, thank you for watching, and thank you for spending your time with me.